Good morning. I'm Joanie Hynes. Welcome, Ocean City, Maryland. It is a rainy day, very humid, as you can tell. I'm not sure about Jason's here, but anyway, I just wanted to introduce to you today. We have some good information, news you can use about the lending industry here in Ocean City, Maryland. This is a second home market for me when I sell in Ocean City, and we have some really good information that we would like to present to everybody about the lending industry, what to expect, where we are, and we're going to do this for any of you out there like a homily. The priest gives 3 points. So today I'm giving 3 points for everybody. We're going to talk about the challenges of purchasing a second home, how to finance and win that home, and also what you need to know about buying a condo here at the resort area in Ocean City and in Delaware. Yep. So I'd like to introduce to you Jason Cook. He is my go-to here at the beach, and he is licensed in Maryland and Delaware, and he's been serving clients for the last 20 years. So Jason.
Thank you, Joanie. I appreciate it.
It's all yours.
Well, where do you want me to start? Just some of the potential differences in pricing maybe, or?
Well, let's go with, let's talk about the challenges of purchasing a second home. I know that Jason, he is a lender, and he works with those that are looking to have a loan and purchasing in this market. What I find when I'm working with buyers and they come to me and they say, hey, look, I want to buy a beach house, they're not thinking about what the interest rate is. They're not thinking about the down payment. They just know that they've purchased a home where they currently live, and now they're ready to buy that beach house. And the interest rates are fine, and so they're ready to buy, but they don't realize what it takes to buy to get a loan. So I will let you explain that.
Well, thank you very much. So down here, we always recommend, once you're interested, to get qualified first. The reason why we want you to get qualified first is the pricing, the affordability of a second home is different than a primary. So your rates are different. The subject property itself, whether it's a single family or a condo or a Class C property, which is a manufactured home that's now in permanent foundation, all have different pricing categories and qualifying requirements. So your qualifying for one property could be different on another one. So it's always good to get ahead of it and start to identify where we are financially, and then you can go and take those numbers and apply it to the property you're looking for. So, and one of the big things that I don't want to call it sticker shock, but it's new in the past little over 2 years, is there is a rate difference now for a second home versus your primary home. So it used to be forever that primary home rates and second home rates were the same. And then in the past, I want to say 2 years, it was April, about 2 years ago. So FHFA is the political arm that controls Fannie Mae and Freddie Mac. So they tell them what to do, they tell us what to do. And Fannie Mae and Freddie Mac set general guidelines for all lenders across the board. And about 2 years ago, they increased what's called LLPAs. That stands for loan level price adjustments. That's a fancy term for the cost of money. So they increased it specifically on second homes by over about 2 points. So your primary home rate might be in the 6s, and you could be looking at the 7s or the 8s, depending upon the property in today's market. And then, of course, as the markets evolve, the bond market comes down some. Those pricings will come down. So I tell everybody, let's get qualified first. Don't look so much at the rate, because a rate is something you can always refinance and renegotiate later. But we really want to focus on affordability. So what's your payment going to be? Can you afford that payment? And what's the cash flow needed? And that's a different thing on a second home versus a primary home. So on a primary home, you can put as little as 5% down and to purchase a home on a conventional loan. And there's other options. On a second home, you're going to be looking around, the minimum is 10%, but then you have pricing considerations. So the cost of the pricing will affect that down payment depending on your qualification. So what I mean by that is, if the cost of the rate, for example, is a little too high, then your down payment might have to increase to be able to qualify to get that rate for that loan. So does that make sense a little bit?
It does. Is there a certain credit score? Do you have to have a certain credit score to qualify for a second home?
Yeah, it's a good question. So your secondary homes are going to be conventional financing only. None of the USDA's or FHA loans will qualify on the second home. So the minimum is 620.
Okay.
And so that's your minimum
Good to know.
credit score for your second home financing. And of course, your pricing goes in about 20-point increments. So you'll have one qualifying criteria between your 620 and your 640 credit score. And then it changes from 640, 660, and all the way up to 740. 740 and higher in my world is top tier. So that's the best terms of whatever it is that you're looking for in terms of property type, property use, so on and so forth.
Okay. How about, so down payment, you said anywhere from 10% on up. 25% seems to be what when we work together, it seems to be the number. Is that because then you don't have to have the PMI, or what's the difference between 10% and 25%?
Great question. So right now we're in an inflationary market currently. And so we're at 10% down, although that is the guideline. The cost of those rates are so high that lenders can't even offer them to you because we're capped on something called the qualified mortgage rule, meaning your points and fees on your loan cannot exceed 3% of the loan. So if the cost of that rate at 10% down is 4%, as an example, in other words, 4 points, we couldn't even offer it unless you were able to get into seller credits and things like that to offset that. So, and in a competitive market that we're in, because inventory is lower, that's not often the case. So you're looking on the second home, you're generally going to end up between most likely 25% down, especially if you're in the condo world. One of the biggest advantages of 25% down on the condo world, and we'll talk about condos I think in a little bit, but when you deal with a condo, it's a lot different than a primary home because not only does the buyer have to get qualified, so the buyer has to have, X in income and Y in assets. I mean, that's the 90,000 foot view, but that's essentially it, combined with their credit score. But the building in which you're buying must qualify as well. So there's Fannie and Freddie guidelines on building qualifying criteria.
Okay.
So, and at 25% down, then your lender's going to be able to do what's called a streamline approval. So there's still items that the lender should look at and go over with you so you're cognizant of what you're buying. But in terms of the building approval, there's less items. As an example, a budget. Okay, so on your guidelines on the condo purchases, the budget has to meet certain criteria. At 25% down in the streamline review, we are not required to review that budget for approval.
Okay.
At 20% down or anything less than 25, that's a full building approval. Then we have to review that budget and look at it, meaning now there's something else that has to meet federal criteria for you to be able to purchase that property.
That's great information. So thank you for that. I think that this is valuable for everybody. Moving on to point number 2. So I know every now and again, Jason will call me and ask me if I have anybody, and I have to tell him, well, my buyers are cash. So he then stopped me one day and said, no, I need to talk to you about something. And I had no idea about cash versus what Jason has available. So I call it how to finance and win. The thing that I love about cash buyers is that they typically win the deal because they're cash. It's less hassle, it's less everything. But when sometimes that's not always the best way to go. Even people with money, sometimes financing is a better route to go. So Jason has a really good program that will help win that deal and be the same as what a cash buyer is. So why don't you explain that? Because I didn't know that.
Joanie, thank you. Yeah, so it's a combination of a couple of programs. It's called Approved to Move and our Property Value Certificate program. As far as I know, it's unique to Embrace, at least here in the Ocean City market. Kind of goes back to what I said earlier about getting qualified in advance. So if we get enough time in advance to talk to you, we can do the Approved to Move, which is a full credit underwrite of the buyer personally. So that means when Joanie goes to write your offer and she has to mark down, is there a financing contingency on this? The answer is no, because we'll have everything looked at by underwriting and we will actually issue you a loan commitment for you and your financials, meaning the only thing needed is property information. Combine that with the next piece is our property value certificate program. So for those buyers that are in the Approved to Move, they're already approved, and you guys are out shopping Saturday, Sunday, it doesn't matter. You find a property, Joanie gives me a call and says, here's how much we want to offer on this particular property. I can email our team that works 7 days a week, say, here's the property, here's the offer price, and they will actually go in and look. They have metrics through Fannie and Freddie about what the values are, and certify that offer value. Meaning now she can write an offer, and you can write an offer with no financing or no appraisal contingency. You have no finance. It's the same as cash. You'll get title work as a cash buyer would do, and you have to get insurance on the property as a cash buyer would do. And that's it. So you're going to equal the playing field. So that's how we can help you win these bids, especially multiple offers.
That's nice. Because there are still multiple offers down here at the beach and in Delaware, depending on where you're buying. I see it a lot. So, yeah, this is really good information, and I appreciate that. I do have a question.
Sure.
Is there an appraisal required for that?
That's a great question. So in order for us to deliver the loan to Fannie and Freddie, yes, we order the appraisal, and an appraisal comes in, but it does not matter what the value comes in for.
Okay.
So as an example, we had one done recently where the agent and the lender that's on my team made the offer at $10,000 above list price, and the value was certified. The appraisal came in lower than the contract price.
Okay.
That deal closed because we certified that value. We'll insure the difference if it does come in lower to make sure that you win that bid at zero impact to the buyer, the seller, the agents, anybody.
That's very good information. When you qualify for that, do you have to have a higher credit score for that and money in the bank? I mean, how do they determine who's a good fit for that? Is it credit driven?
No, it's not credit driven. Great question. So that's a very good point to bring up. So it was only applicable on conventional financing. So as long as the proof to move is done and you qualify for conventional financing and your debt ratios, credit scores, and all that work towards the property you're looking to buy, that's it.
Wow, that's really good information. So that's anybody who's out there looking to beat against the cash deal. Jason's your man, because I mean, really, that's really good information, because I win when I have cash buyers. I always say, when the stock market is good, my cash buyers are buying, and then when the interest rates are good, they're using finance. Yep. So it's a good mix of both, actually, and I appreciate that. So our third point that we'd like to discuss here, and this is a big deal for here at the shore, Delaware and Maryland, what you need to know about buying a condo, specifically a condo. Jason's actually helped me out when I've had a listing. He helped a buyer on the other side get approved, because when you are working with someone who is outside of this area and doesn't understand the condos and the reserves and just the local market itself, it makes it really difficult. Even though when you work with somebody like in Virginia and they say, oh yeah, we can do the beach, it's yes, they can do the beach. Can they do the beach? Because that really does it hurts the deal a lot. And so using someone on the local level, it really does help you. It helps you get the deal, and it helps you close the deal. And so Jason's going to talk a little bit about the reserve study and why the local lenders can help get that deal done. So,
well, thank you for that. I appreciate the promotion there.
Seriously.
But it does help, and obviously I'm biased because I'm here and local, but the resort market is different. You add the second home, you add the added aspect where now the building must qualify as well. So one of the recent changes that Ocean City's going through is the HB 107 rule that came out in October of 22. So what that is, it's a state law to where all condos, HOAs, and co-ops in the entire state must have a reserve study done. So the reserve study is effectively a giant home inspection. So structural engineers, qualified reserve study, people will go out, look at the property, and determine what needs to be replaced, when it needs to be replaced, the cost of that replacement. And that can affect the building's warrantability. A warrantable building is one that we qualify that's eligible for conventional financing. A non-warrantable building is not qualified for conventional financing. And then you have to look at alternative ways to potentially finance it, usually higher interest rates and worse loan terms, maybe an ARM versus a fixed rate mortgage, something of that nature. So the reserve studies, the law went out in 22. All the buildings had until October of 23 to complete them. I can tell you right now, we're July of 24, and I know of some buildings that haven't gotten it done yet. They're still in the process of doing this. So it doesn't automatically negate it from not being eligible for financing, But when we go to approve the buildings, there's a list of questions. It's usually on a 5-page questionnaire that your lender is going to provide to the property manager. And they're going to have to start answering questions, and how those questions are answered, it requires sometimes additional documentation that we'll have to look at. The reserve study may be one of them. And then we have to identify what type of repairs are needed and why. Because the agencies came out with additional rules in September of 2018 of requirements that we now have to follow for building approval. So just the local knowledge, the local relationships with the property managers will help a lot, because we can tend to get things done a lot quicker. I, for one, do not like to wait around. You're buying a property. It's one of the most significant purchases of anybody's life, even if it is a second home. So having the local relationships, we try to get that information as quickly as possible, usually within the first week or two of you being on the contract. So if there is something with the building, we can find out right away and address it for you.
Yeah, that's really good information. I know we've had a couple deals together, and one of the things that I love about what I do, I work in 2 different markets. So I love my beach market because people have worked hard and they've saved, and this was a dream. So me trying to protect that asset as a dream, that's important to me, and it's important to who I work with to help with that. One of the things that I see when you work with a buyer, the words mold and the word structural, those are all tickers over on the other side of the bridge. But here it's a common thing. But there's also, mold could be, it's going to be everywhere because you're on the water. But also structural issues. I find that almost everything has something, but they look at it over time. It's not an initial thing. It usually it's been there for a period of time, so they watch it over time, and there's usually indications, and they've marked it and they've recorded it. So those are not big deals here for the most part, and that's where having, again, a local lender come in and help, because the underwriting department for someone else is going to quickly deny that, or they're going to question it, or they're going to really give it a hard time because they don't know. They just don't understand the language and the terminology. That's what I find when you're working outside of the local market that gets you in trouble. And that declines people from buying, their second home that they've worked so hard for and put all this money into your inspections and your finance. And, it's just much easier to work and let your agent help you get that, put that team together, because it's definitely a team effort. And then usually what I do is I'll call Jason. If I have somebody who wants to be in a particular building, he knows them. He knows all these people to reach out to and contact to help with that, because not all listing agents have all the information that you need. One thing I do have a question for. So when I am a listing agent, and to make it easier for the seller, I'll order the condo docs and then I'll be reimbursed at settlement. That's the easiest thing for me, because you get a million questions from a seller and you don't know how to answer them because they ask these questions when you're in the middle of something else. So I'm like, I'll just take care of that. One question: do we order? Is it mandatory, or do we typically order the lender questionnaire, or is that something that the lenders do?
That's a very good question. The lender's going to order the lender questionnaire. Mainly, different companies have different forms that they use. A lot of companies will accept a general form, but there's property managers that will charge different rates for using different forms. And you could, as an agent, order the base form, and the buyer's lender is like, well, we don't use that form. They have to order another one anyway. So that would be the lender's responsibility. Some lenders charge the buyers up front, some charge them at settlement, much like yourself. I want to know what's going on right away. So once we are under contract and we're starting with the financing, I order it right away myself. And then at settlement, that whatever the property manager charges, if anything, will be part of the closing costs.
So that's really good information. And I have found that outside lenders, their fee is much higher than what yours is. I don't know why, but I have seen that. So, it's again, trust your resources. When you're looking for that second home, trust who you're working with, trust the team that's put in front of you, because we're the ones that are going to help get you there, preserve that asset so that you can enjoy it and not have to worry about anything after the settlement date. So
Absolutely.
I appreciate your time, Jason. I really, really do.
Okay,
And thank you. I And if anybody needs to get a hold of Jason, how do they contact you?
So yeah, you can thank you, Joanie, for all, but you can reach me at 443-859-2222. That is my personal cell phone. Weekends, no problem. We're in the second home market. We work all the time. So I ask, leave a voicemail. I'm not a big texter. I get market updates on my phone, and I might miss it. So if you call, leave a voicemail if I'm out and about, or you can email me at jcook@embracehomeloans.com. And even if it's just a consultation, love to be able to just talk to you and kind of educate as much as I can. Because like Joanie said, I'm just here to help. I tell a joke and I say I'm a plethora of useless information. I got a lot of second home condo stuff stuck in my head. So if I can explain stuff and make sure you're prepared, and by the way, there's no cost. I get this question a lot. There's no cost to the approved to moves or the pre-qualifications. So we can do all that and take all the anxiety of the financing aspect of purchasing out of the way in the beginning. And that takes about a week.
Oh, good. That's good information. So thank you. So call Jason, or you could call me, Joanie Hynes, 443-375-0002, or Joanie@joaniehynes.com. I'd love to work with you. And as a team, we can get you in. So
Absolutely.
thank you. Have a good day.
Joanie, thank you. Thank you all.